let's talk about cash and accrual basis accounting for real estate investors. What's up, guys? My name is Benjamin Day with Lionshare Bookkeeping, Landlord CFO, where we like to help demystify the accounting and finance nonsense that real estate investors run into all the time. And today I want to talk about something that has always just confused the snot out of every real estate investor I've ever spoken with. And it's this idea of different tax things that you can do, different tax categories effectively, or different tax approaches to their accounting. And it's cash basis versus accrual basis accounting effectively. And there's some different rules here and some different regulations, and everybody likes to talk about it and say everybody's got their opinions. And I really want to kind of walk you through a story so that you can better understand what these are and understand why you really are going to end up using both in your business and why you really want to end up using both to some extent in your business. So let's get into it. First things first, when it comes to cash and accrual basis accounting, this is really, there's an easy mindset around this, where I really like to think of cash basis as reactive and accrual basis as proactive. Now, it's important to know that you usually can't switch between the two, at least on your taxes, without filling out some additional forms and jumping through hoops. But generally speaking, it's like the numbers aren't really going to change. What happens is we change the time that those numbers are reported. So the easiest way to understand this is like with a utility bill. So if I get the utility bill for the last 30 days and I get it on Christmas, and they say, hey, please pay this between Christmas and January 25th, right? Please pay this inside the next 30 days. If I pay that bill in January, like it's Christmas, I'm not running my business over Christmas and New Year's. I'm going to get to it in January. If I pay it in January, that expense will be a January New Year expense, right? So, right now it's 2021. If I'd gotten this in December of 2020 and paid it in January, then I wouldn't have that expense on my tax return until 2021, right? Because that's when I paid the cash for it. That is what a cash basis is effectively. Accrual basis would be, effectively, it would say, hey, listen, you received this bill in December, and so regardless of when you pay it, you're going to claim that expense in December. And so what that means then is that even if I didn't pay it until January, I could claim that expense on my 2020, but when I pay it, it will not show up, and like that expense won't happen a month when I pay it. So effectively, you can claim those expenses earlier than you actually paid them. Now, what is sticky about accrual then is that it really, it requires you to have fantastic records, fantastic bookkeeping, really understand the nuances here and have somebody really babysitting those guidelines. In addition to that, there's a lot of tax advice that says don't use accrual basis in real estate until you reach a certain size. One, because accrual basis is complicated and it takes a lot of babysitting. And two, it's just fundamentally easier to do cash basis. And so if you're a real estate investor with a whole bunch of entities and you're taking depreciation and you're doing all of these other strategies, cash basis just makes a better fit generally in the long run. Up until a certain size where you're required at some point to move into accrual basis, but that's a whole other thing. So really what we're looking at this point is, so we've got cash and accrual. Your tax person, more likely than not, is going to really strongly recommend that you run cash basis. But I'm here to tell you that you should file taxes cash basis and run your business in accrual basis. And here's what I mean by this. Here's the easiest way to understand this. So we already talked about this utilities thing. Let's pretend for a second that you have a rental business. Like, let's say it's an apartment building, or maybe it's a portfolio, and some of it is stabilized. Like you've got, 10 houses, and 7 of them are stabilized, ready to go. They've got renters in them. They've been rehabbed. We've gotten the refinance. Like this is ready to go, but we still have some work on the remaining 3 that needs to get done. Right. So if I'm your bookkeeper, if we're doing your books, we're doing your CFO strategies, and I hand you a report, that report is going to show you that everything is stabilized and everything's fine. You've got cash in the bank. You've got all kinds of cool stuff, right? Cash basis, because it's reactive. It's what's already happened. And we know that you're bringing in money. if you haven't started your rehab yet, it's going to look like your business is healthy and safe and secure and all this good stuff. You've got excess cash in the bank accounts and like you're bringing in money and this is fantastic, right? That's what it's going to look like on cash basis. But you and I both know, and we're beginning to do these mental gymnastics where it's, hey, we've got 7 houses that are great. And so our financial statements look great, but the 3 houses, this is still a big project that's coming up. I'm nervous about this project. We've got a whole bunch of bills. We've gotten a scope of work done. We've got a general contractor that's going to go in there. We've got big cash needs that we're going to end up having on these 3 units or this rehab that's pending right now. And that's why we have so much cash in the bank. That's why the rest of the business looks so great, is because we're really not doing anything in the business right now. We're trying to save our resources so that we can finish those rehabs. In this case, I would really strongly recommend taking an accrual mindset to your business. So if you've got 3 houses that need to be rehabbed and you're trying to do these mental gymnastics, looking at your cash basis statements and your analysis and your lagging indicators, what you can do in accrual is begin to create those bills. And we love doing this. We love doing this for rehabs, for house flippers, all kinds of stuff where you've got these big expenses coming up. Is we'll create bills for those general contractors, for those subs, and say, hey, like, we got a quote, we got a bid that we accepted on that work today. And we're going to pay off this bid, this quote, gradually over time, exactly like you would normally, exactly how you would operate. And we're just going to apply those payments to this original bill. And so what we can do at that point is we can show, hey, you're going to owe a whole bunch of money on these projects. And we can show that the right way in accounting using accrual basis. So then whenever you're paying those bills off, like there's no new numbers. We just apply the right bill to, or we apply the right payment to the right bill and the right contractor. Everything works as normal. But now when we give you a financial report, it's not just, hey, everything's hunky-dory over here in your 7 units. But we can also begin to show you, here's how you're handling your rehab right now. We know what the plan is, and now we can proactively show you where you're at on that scope of work. How are you paying that off right now? And then we can, additionally, we can go in and say, hey, you had a change order. We need to incorporate that. And this is how your numbers have changed. And we can begin to do a whole lot more proactive planning if we get the spending up front. If we know that bill is going to come through up front, we can incorporate that into your financial plan and give you way more insights. Listen, we're covering a whole lot of like big picture accounting information in here right now, when fundamentally there's some blocking and tackling that needs to happen first. If you are a real estate investor and you want to get the most out of your accounting, that means that you have to be doing your bookkeeping, and it has to be right, and it cannot take you forever to get done. You have more important things to do, like taking your financial statements to a bank or your tax preparer and getting money out of your business without having to do any new sort of marketing campaign. And that all of that you can do in your finance department of your business. But the bookkeeping has to be solid. If you're really struggling how to put that together and what that should look like for you, we've got a masterclass that we've put together. It's down in the link below on how you can begin to build all of that stuff out with our landlord CFO system. I'll just give you all the secrets and then ask you if you want our help. So go check that out. The best way to begin to think about this is really, for me, is this idea of the mental gymnastics or just being proactive. Cash basis accounting is really reactive. It's just, hey, what happened? I'm going to write it down and fill out a form, and here you go. And there's a lot more nuance to it than that, but that is effectively kind of how cash basis begins to work. Accrual basis is much more proactive. It's, hey, give me your strategy, give me your plan. What kind of rehab money are you going to spend? What kind of debt are you going to service this year? There are different items that we can begin to pull together to build out accrual basis accounting that's going to be much more thorough and give you a better kind of idea of what's going on. And then because we know what's going on, we can walk you through it, explain it to you in English, and really give you the value that you need. And any accountant or bookkeeper that really knows real estate should be able to do that for you as well. But they really have to know what they're doing. This is not just amateur hour. Like, this is intense stuff fundamentally. That proactive and reactive planning is how we like to think through it. Thinking through it like if you get financial statements and then you have to sit and think and do mental gymnastics on like, here's what my balance sheet says, but I know that I've got this coming up and I know I've got that coming up. If you're finding yourself doing that, like you should just use accrual basis, like, because we can give you that information. We can give you those numbers. Anybody can give you those numbers and create those bills. If you're thinking through it and it's documented somewhere, give it to your bookkeeper. We can plug it in, give you accrual basis statements where it's just all right there on the page, and you can begin to make the plan right there instead of having to do the gymnastics and then make the plan. Include your bookkeeper and your accountant in the process, and we can help you grow your business in a significant way. And that's honestly, listen, like the biggest blowback we get on this, beyond the, hey, this is going to be a little more complicated, is from accountants. It's from CPAs. It's from folks who say, hey, under no circumstance should you be doing any bookkeeping in accrual basis at all. It's cash basis. Do not do any accrual basis with my real estate clients. And that's fine. I hear you. What we also know to be true is that if we're running accrual basis, and we've got those bills that are stacked up and are outstanding, we've got invoices that are stacked up and outstanding, whatever it is super easy to do to accrual to cash conversion on your tax return. So if your CPA is giving you grief and you'd really like to do something like this, but all the professionals in your life are saying, hey, don't, it's a bummer, just know that it is one extra form where you take numbers off of your accrual basis and adjust them to make it fit cash basis, and you're off to the races. It's also good to know that if you're doing your accounting in an actual certified software like QuickBooks Online, that the difference between running cash basis and accrual basis is literally clicking a button whenever you run a report. There's a toggle you can switch between cash and accrual, so you can get the cash basis for your tax preparer and the accrual basis for you and your management team for your planning. And it is fantastic. We run all of our planning, all of our analysis in accrual, because that's what we know to be true for your business. Those are the bills that we have. Those are the receipts that we have. Those are the invoices we have. And we want to begin to analyze those and begin to help people begin to understand things. If you are wanting to project your expenses into the future, load in bills and begin to figure that out. If you're really fundamentally want to begin to see things like vacancy, loss to lease, late payments, load invoices into your accounting software. And then what you'll do in accruals, you'll see here's all the money you should have collected. And then you can go look at your invoices outstanding and say, oh, hey, we didn't actually collect all of that money. We need to go get that right now. And it's an inspiration. It's kicking the pants. I think accrual basis is the secret weapon of all finance departments if you use it correctly. You just have to be applying it in the right way, and we can be off the races, have a really good time. Listen, y'all, let me know what you think about this stuff. How are you currently doing your accounting? Is it cash or accrual? Do you feel like if you're doing cash basis, are you still doing these sort of mental gymnastics to get the number that you need to get? Have you tried accrual basis before and it totally blew up on you, or it changed something for you? Let us know in the comments what your thoughts are, what your experiences have been, and what questions you have. What can we dive into a little bit deeper in order to give you more information? Thank you so much. Be sure to like, comment, subscribe, and I'll see you in the next video. Thanks.